Hey traders, checking into the stock market today. Bulls started strong, but definitely some profit taking and consolidation into the end of the day week close. I'll show you a couple key patterns I'm keeping an eye on to tell me whether or not the momentum is shifting towards the bears. All right, so bulls followed through with a second gap up open in a row and held on strong through the morning, at least to start the morning. But by the second half of the day, let's see, actually early morning, we topped out just a straight shot up from the open. Hit that high at 10:15, and then from there we pulled back for the rest of the day. We had a nice little hourly bear flag confirming further downside, and we closed fairly weak near the low of the day. So is this the top? I'll show you what I'm watching that would be a red flag for me if I'm a bull. So as we know, the daily higher lows are what are key on SPY, and anything above 410.22 is a higher low. Now, a lot of people don't want to wait for the price to pull back another 2.5% to get to that level and then say, well, I don't want to short now. We're already down 5% from the high or whatever it is. But for me, I am going to give the bulls space to work with because they have been forming these higher lows the whole way up. One thing that I'm watching on the futures chart for the Nasdaq is the daily bull flag confirming here with no follow through. And that just rings a bell for me because this last weekly bounce, which granted is very different, this current bounce is much more believable and impressive and supports established along the way up. But it was a daily bull flag that confirmed with zero follow through that marked the top. So I remember that the weekly consolidation last started with a daily bull flag confirming and no follow through. So I'm paying attention, and this is a daily bull flag that confirmed today and currently has zero follow through. So I then zoom in and say, okay, what are clues? What would confirm to me that this is a red flag for bulls? So I'm looking on the 12-hour time frame, and this is now my guide until we break one direction or the other. If this 12-hour rising wedge breaks bear, that's going to further increase the red flags for bulls that weekly consolidation is shaping up. So when we're talking about the markets, again, we want to be aware of what time frame we're discussing, because I'm watching for weekly consolidation, as I've been saying a whole bunch. And whether or not this is the bottom is set or we drop to fresh fear lows, everybody that's in the 2008 camp says, oh, this bounce is, right in line with what we saw then, and then we topped out and rolled over. So could that happen? Absolutely. There's going to be tons of clues along the way, most notably big bear volume and all major sectors dropping at the same time, days on that drop. For many days on that drop if we're going to head to fresh lows. But I'm looking for weekly consolidation regardless. So I can position for the weekly consolidation and I can then gauge the retracement size and whether or not I'm getting the signals that I need that we're going to head back to those lows. And essentially, retracement size on the weekly on the next pullback is going to be very key for me in determining probabilities. The biggest factor for me to say that the bottom is in and that we're not heading back to fresh fear lows is Apple. And that's just because Apple for me is the most important stock in the stock market because of the weight of its holdings in SPY, in QQQ, these ETFs. And it just is, if you have to choose one most important individual name, I do believe that it is Apple. So if you look at the Apple weekly time frame, this bounce is extremely impressive. If the entire market were doing this right now to the magnitude that Apple were, I'd be 85% sure that the bottom is in, as opposed to maybe 53%. So I'm going to be watching. We have a resistance zone up here. There's certainly a lot of price action in the 170s. What does the weekly consolidation of Apple look like? If anybody's going to head back to a new all-time high out of our major sectors and major individual names, Apple's going to be one of the first ones to do it. So if Apple hits new all-time highs, for me, that significantly increases probabilities that the S&P 500 can head back to all-time highs as well. So at this point in time, after the close today, we are 8% away from all-time highs. So the next weekly consolidation, I'm going to be watching EMA 12. I'm going to be watching the retracement size. Is it a bull flag? Because if we confirm a weekly trend change from here on Apple, we're going to be knocking on the door from all-time highs at that point. Even if this is the top right now into weekly consolidation, which again, I need a lot more proving from the bears. If we were to confirm the weekly trend change, again, we're going to be right there. So I'm keeping a close eye on the Apple because Apple has been our lead tech bull, captain of Team Bull, and it's keeping that as the case. And so I'm going to be watching that weekly consolidation very closely. Weekly stair-step pattern, higher low every single week for 8 weeks in a row now. That is 2 months of nothing but up. So that is the biggest point in favor of the bottom being set. And the biggest point in favor of the bottom not being set for me will be a 50% retracement, 50% plus on the S&P 500 the next time we pull back on the weekly. And again, it's one of those scenarios where you say, well, I don't want to wait till we're down 50% because then that's a ton of downside missed that I could have been profiting as a bear, which is why I will look to position for consolidation and I will just exit my bearish positions if the weekly higher low is set fairly quickly. So I'm looking at 393s as a key level for me, where if we break that level, it's then 50% plus. If we hold that level, it is less than 50%. So I'm keeping an eye on that once weekly consolidation begins, but it's not at the moment. So I did swing a little bit of bearish positions SQQQ overnight tonight, just because of how we closed. Didn't swing anything bearish yesterday with the close at the high of the day. Close at the low of the day is much different for me. And we did see a very brief period of time today where all of our major sectors did hit low of the day at the same time. So it's definitely enough to get me paying attention. So the ideal bear scenario would obviously be further follow through for the Nasdaq to just head right down towards this uptrending support line on the 12-hour time frame for this potential rising wedge. But a best case scenario for the bull is just looking at this to be, this is the S&P 500 futures chart. They're just hoping for a 4-hour higher low right off EMA 12. So if the bulls control the overnight session, we're going to wake up tomorrow. 4-hour EMA 12 is going to set the higher low as support. And as far as retracement size, could this be a 4-hour bull flag? Absolutely, it's still possible if 4-hour EMA 12 is holding. So can definitely see 2 scenarios right now where I'm open to either possibility. I am open to a 4-hour bull flag on the S&P 500, and I am open to the Nasdaq potential 12-hour rising wedge. So the last week of trading, with being patient and not really having much exposure into the CPI reaction, I'm not doing a whole lot every day. I'm just grinding up little half-day maker, 3/4 day maker the last couple of days. Nothing notable. And I know that the next time that I am going to make any decent gains will be weekly consolidation. Because with how we are set up on weekly charts right now, that is going to be where I'm most comfortable having a bit more aggressive of a setup and letting trades play out a little bit longer. So I'm going to continue day trading in both directions, and definitely day traded in both directions today until I am more confident that weekly consolidation is shaping up. So if the S&P 500 loses this 4-hour EMA 12 support tomorrow, that's definitely going to be notable to me as far as increasing probabilities that a shift is underway. Because again, if the S&P 500 loses this support, I know that the Nasdaq daily bull flag is going to continue consolidating right after breaking bullish. Plus, we've got still the S&P 500. We did break the weekly resistance, but still keeping an eye on that as well. So burden's still on bears for me. But again, that doesn't mean I can't make short-term bear opportunity. Today, QQQ, I don't often trade all Thursday. Thursday is my least focused trading day. I generally leave midday and get off the computer. Monday, Tuesday, Wednesday are my most focused. Friday sometimes as well. But came back in time to see a weak bounce attempt. And so was able to play this bear flag bearish. And we had the high of the bounce of 326.97. We failed to break it. And then when we did break it, there was zero follow through. We broke it for one candle straight into multiple candles of consolidation. So I believe it was this little 5-minute lower high here where I grabbed a SQQQ position for that hourly rise or the hourly bear flag. And if you look at SPY during that same bounce, it was stronger. So I knew QQQ has relative weakness and the bull break saw zero follow through. SPY did the same thing, but QQQ's hourly bounce was weaker, which is why I chose it instead of the S&P 500, because the financial sector continues to stand out a bit stronger. That's another factor for the bears in the short term. The financial sector is very due for daily consolidation. 2 gap ups in a row, and at this point, look at the daily RSI. So we use RSI. I love using RSI for bounces as back burner trades. This is a back burner for bears. This is the first time the daily RSI has hit 70 since all-time highs. So bears are keeping that. It's not, that's not a signal enough to then go bearish. We also have a weekly resistance level to be watching at 35.56, which we pulled back 1% under today at the high of the day. So the RSI alone isn't enough to just say, all right, I'm short. But it's enough for us to say, okay, I'm now interested in scouting a short. So we're going to keep an eye on that. And certainly if we were to gap up open tomorrow with a 3 gap up bearish reversal pattern, I personally would be scouting bearish entries in XLF for daily consolidation. But definitely the lead bull sector over the past few days, which is why I've been choosing SQQQ instead of SPY, because SPY has held on stronger instead of SPXS, which is the leveraged bear ETF for SPY. I'm choosing QQQ short instead of SPY short because of XLF strength. But I am watching for that daily consolidation in XLF. Semiconductors, double top, rejecting from resistance, and closing at the low of the day. If we break the low of today tomorrow, the daily lower high will be set, and we'll be looking for a daily higher low to try and form compared to 226.73. But at the moment, we are rejecting from resistance just under the weekly resistance level of 249.12. In the video yesterday, highlighted the NVDA potential head and shoulders. That is the drawing from yesterday. And I'm less confident in it being a head and shoulders. The reason being the bounce retracement. If it's going to be a head and shoulders, you want to see a 50% retracement or less into the lower low. But the retracement here was something along the lines of 80%. So for me, that just shifts my perspective. Yes, we can eventually break bear, but I would be looking for a tightening range first. The sign of an equilibrium is a hard drop and a big bounce over 50% retracement, or vice versa, hard bounce, big drop. And so keeping an eye out for the possibility of that tightening range. But nice gap fill at 186.66, and then a top being found with a pretty big pullback. So hourly downtrend is our guide on some individual names. QQQ and SPY gave us hourly downtrends, but NVDA has not yet. So an aggressive bear scouting a daily lower high is hoping for a higher open tomorrow morning to scout an hourly lower high, knowing that we have to confirm the hourly downtrend for daily consolidation to be underway. I know for some of you, what I'm saying right now is difficult to comprehend, but if you stick with it, 6 months in, it all makes sense. And it's a beautiful feeling when that's the case. Healthcare sector also rejecting from some resistance. One scenario that I'm keeping an eye out for, or at least I was this morning and still am, if we see XLF pull back on the daily time frame, does somebody else step up and see strength? So can XLV break this resistance when XLF starts daily consolidation, which would be rotation? Again, that's one of our major sectors going up while one of our major sectors is pulling back, which is what broader market bulls want to see. Anytime there's a major sector pulling back, they want to see somebody else picking up the slack. Because again, it's money leaving the market when everything's dropping together. So that's something I'm keeping an eye on as well, but a very clear resistance rejection. And if we drop down and break 130.37, that's going to be a solid win for the bears in the healthcare sector. Right now, we're smack dab in the middle of this range, but the direction that this range breaks is definitely going to be key for me into the second half of August. So financial sector watching for potential daily consolidation, but bulls still hanging on to control. IWM, bearish reversal candle on the daily, but again, we just have to remember that IWM from the close of today, it's possible that we pull back. Trading view is slow. Come on. It's possible we pull back 3% from here and still maintain a daily uptrend and still maintain daily EMA 12. So again, that's what I was talking about yesterday where I said, okay, well, now that we got this big bull push up, I'm more comfortable looking bullish again on hourly higher lows or on daily higher lows because there's more space to work with. So IWM on daily consolidation, unless there's big time bear volume, is going to be scouting a daily higher low to be the result of the next consolidation. Keeping in mind that the financial sector is the largest sector holdings of IWM means that if XLF starts daily consolidation, then IWM is very, very likely to start daily consolidation as well. The biotech sector also has a very clear double top. So XLV and XBI, certainly related to each other as sectors, very clear daily double tops. The biotech sector bulls are hoping that we see a 4-hour equilibrium form up with a high, low, double top, higher low. 89.14 is very key, and just a continued tightening range. And of course, bears hope to break 89.14 to have the double top and loss of the daily uptrend. So I'm watching the biotech sector very closely, traded at bearish today, and another one where I just came home in the afternoon. And the only way I'm taking trades after not being around for a couple of hours is if there's just a very clear level nearby. So I was recognizing relative weakness in the biotech sector here because this is what the 5-minute bounce looked like. We just looked at QQQ's 5-minute bounce and SPY's 5-minute bounce. And granted, the bull breaks didn't have any follow through. We're going to do a computer reboot. I know I'm due for a Brave update. So, SPY and QQQ had 5-minute uptrends into an hourly bounce, and this is what XBI was doing at that same point in time. We didn't have a 5-minute uptrend. So I get home, and I'm on the computer right here. And I'm checking in and saying, all right, well, I'm just going to scout a 5-minute lower high and make a bearish entry, and I'll stop out if 92.84 breaks. And so made that entry. Let's see where. Time is this. 1:15. So I entered a little bit later than that. The time was 1:24 essentially. So 1:24 is this candle. So we had set the 5-minute lower high, broke the little higher low every candle pattern, and now I'm in. And at that point, I can use this very close by resistance level if I want. But on LABD, very nice follow through from there. That was this higher low. And then scaled out into the afternoon a little bit early, but held it for a decent amount. I was scaling out in the low 18s here. So it's a nice 4% move. But again, I will be watching bearish in the biotech sector if XBI divided by SPY continues to show us relative weakness. And you can see it already broke bear on the daily. So XBI has not broken bear, but XBI divided by SPY has. And again, that just shows us relative weakness compared to the S&P 500. So XBI, next time we bounce, keeping an eye out for an hourly lower high. There's a whole bunch of space for it to form. And there's a bunch of individual names where after the drop today, tomorrow, if we open higher, we're scouting hourly lower highs on the morning. If we open lower with a gap down, maybe we're scouting hourly oversold bounces. We'll have to see what the setup is. But higher opens, and we're keeping an eye out for hourly lower highs on the names that dropped more significantly. Cannabis names today started the morning strong with some follow through. So CGC high of yesterday, 336, and we broke that level and followed through by about 5%. Not bad. TLRY, 4%, but unable to keep those gains and also pulled back very significantly. 11% drop from the high. Again, cannot stress enough that these very volatile names have very significant opportunity in both directions over the past couple of weeks. And so I traded these names bullish on the morning before I left the computer, and I didn't do it well. I was trading poorly this morning. And it was the kind of scenario where, I turned this morning bull move into nothing. It was, I was break even on the morning trading this move, and I was trading both TLRY and CGC a bit. And the lesson for me, the takeaway from me, is smaller position sizes because the pullbacks were just too significant for me to remain comfortable. For example, from the high of the day here, it's a 2.5% pullback. And for me, a 2.5% move on an entire position is fairly significant. So I've traded poorly bullish, but I made up for it bearish on this 5-minute bear flag. And this play was just recognizing relative weakness again. So look at the move here from 10:05. Let's just look at the 20-minute move from 10:05 to 10:20, 15-minute move. We dropped 4.5%. And at that point in time, 10:05, we hadn't topped out yet. What was that? 10:05 to 10:20. And for the S&P 500, 1005 to 1020, we were green or break even. Very different. So tons of relative weakness there. And so I then looked at that 5-minute bounce and said, well, if this is going to be a bear flag, we're likely going to break the low of the day. This is the bulls attempting to defend the low of the day. And if they don't show up with volume and if it's unimpressive, then we will likely take out 330 and 328 at the same time. And I would anticipate a good number of day trading stops trigger on those levels breaking. So shorted. This is extra trade review because I forgot to talk about my trades yesterday, even though I said I would. Where is my short? So this is 1035. It was a little bit late. Yeah, I was a little bit late. So sold it short at 1041. Not that bad. It was right on that candle, that big red candle. I was a part of that big red candle. That candle right there, 1041. I'm in there. And then just scaled out into the weakness. Took a quarter, took another half. So some decent, again, on the day, I didn't really have a notable day today. I think I was green, but just a small amount. And the reason is that I do have S&P 500 long-term no-touch position. I have my ATAI high risk, high reward psychedelic swing. I've got NEM, my gold miner swing. So a bunch of those were red. And so my bearish day trading was offsetting the red that my swing trading positions were seeing. And so CMPS, big drop today for a psychedelic name. And ATAI failed resistance, failed high of yesterday, and is now heading back down to support. We'll see what earnings do for ATAI, but again, I'm smaller position size, bigger picture, and the weekly support of 351 is the most important level for me. So I'm looking a couple months out on this position. So giving it plenty of wiggle room, but I got to offset when it's down 5%, because even if it's a small position, 5% is a big drop. Tried to play the hourly oversold bounce on CMPS at the end of the day. First hourly oversold conditions after the daily breakout. 15-minute RSI was down to the low 20s. So made an entry at 1748. I sold a quarter at 1768. I was going to sell another quarter at 1788, which would have been real nice, but didn't get there. And then I did exit on the new low of the day. And that was a uneventful, tiny loss. And the reason I didn't want to swing is I don't swing in the opposing direction of closes. If you got significant momentum in one direction, I very rarely will swing in the other way. Only if we are at absolute extremes and it's an initial entry with a game plan of further entries playing a bounce. But CMPS is new enough for me and is thinly traded enough that I'll just see what tomorrow brings. And also keeping an open mind for the possibility of weekly consolidation. I would ideally like to see a weekly pullback to EMA support for an entry. So some of our higher risk, higher reward names already shaping up weekly consolidation perhaps. CGC is rejecting from weekly EMA 12, which has been giving bulls trouble for a long time. We've got MARA, our crypto miners. Big, strong start to the day, but again, a lot of profit taking, so shaping up for potential daily consolidation. So daily uptrends remaining the guide. The dollar. I don't know how many times I'm going to keep clicking bunk charts. So the dollar, so when I see a bear break with a lack of follow through, I like to scout wedges. So I zoom into the 12-hour time frame and say, okay, can I draw a falling wedge here? And so I draw, let's go to the 4-hour. More detail, more pivot points and anchors to be drawing off of. So I would draw that downtrending support line that has 3 or 4 touches, and this resistance line. We'll keep an eye on it, and not really. Essentially, when I establish a pattern that I think might be a wedge, I draw it and I watch it, and then if it reacts to the level that I drew, notably one more time, then I say, all right, I'm now a much more convinced believer that this pattern is valid and worth watching. So I just drew it right now, and I need to see these dollar bulls make their way up towards resistance if this is going to be a pattern that I continue paying attention to. And it was the same thing with natural gas. Say it again. On the 4-hour time frame, where I drew this falling wedge, and once we rejected from resistance and pulled back fairly notably, that told me, yep, pay attention to this falling wedge because that is now more valid and it's more likely to be a falling wedge because the levels that you drew are coming into play. So natural gas bulls got really nice follow through there. Is this a weekly cup and handle? I'm not ruling it out. Generally, you want the weekly retracement or the bull flag retracement on whatever time frame to be 382 or less to be a healthy bull flag. This is in the gray zone. It's about a 45% retracement, but weekly EMA 12 is holding, and we know natural gas is massively volatile in both directions. So if anybody can pull back 50% into continuation, it's natural gas. So it's definitely on the table and worth watching for. And if we're going to expect follow through, I would ideally want to see an initial rejection, a daily higher low, and then go. But we'll see if we shape up a daily pullback before getting to that double top of resistance. The other falling wedge we've been watching, oil, daily. Look where we're topping out. So if we are red tomorrow, that is going to increase the validity of this falling wedge for me. I drew the falling wedge at support maybe 3 or 4 days ago. And if we reject from resistance, then absolutely going to be paying extra attention to this oil falling wedge. So we'll see what tomorrow brings, but nice green day today. Energy sector scouting a daily lower high. Ooh, nice big move. That's got to be natural gas fueled. 78, we're right there, 78.66. We're close to confirming a weekly uptrend. It's not a significant pivot, but you look at the monthly, it's the kind of scenario where, I look at this and some of you who are paying attention and say, well, there have been times where we see a little wick like that and Dan doesn't count it as a trend change. Why would he count it here? Preceding price action. If you're in a 1-year downtrend forever and then you do this on the weekly, that's not really a convincing pivot for me. If you're in a 1-year uptrend, breakout forever, and you're bouncing off monthly EMA 12, looking for a monthly high or low, then I will believe that. So it's the preceding price action and the preceding trends that have a major impact on whether or not I will consider something like that a trend change. If you cover all this preceding price action, and you tell me it's been a 1-year downtrend, I say, nah, it's not enough. If you show me that, I say, yeah, that's enough. So the monthly trend is what would matter for that to be a weekly trend change for me. What else? The metals confirming. We got wedges everywhere, huh? Metals are confirming. Gold confirmed the rising wedge back test, previous support, now resistance and rejecting. But keeping in mind that, as I mentioned, if we break this bear, it is still possible that that just leads to a daily higher low. So bulls are hoping a daily higher low can form, holding EMA 12 to try and see daily uptrend continuation. Silver is also at rising wedge support now. Gold already broke bears. Silver has not. It was a bit of a longer term time frame here. So keeping an eye on that. Daily consolidation already underway for silver. Same thing. Need to set a higher low quickly. Need to hold EMA 12, or we're going to be shaping up weekly consolidation in these metals off of their EMA 12 weekly resistance. So that's a lot. There's a lot in this video. And again, this is definitely a bit more advanced with all the details that I'm going into, but stick with it until it all starts to click. Watching the dollar. Can the dollar bull shape up a falling wedge to hold weekly EMA 12, which would increase probabilities of weekly consolidation in metals and in crypto and in stocks? Does the S&P 500 just set a 4-hour higher low and overnight see strength and we get a higher open and we're testing our highs tomorrow? If not, if we're red tomorrow, Nasdaq 12-hour rising wedge on close watch. Feel free to ask any questions. Do good things.